Hey everyone, it's Jordan, and this video is being recorded on the afternoon of Wednesday, July 6, 2016. Thank you for joining me today. In this video, I'm going to talk about GLD as a proxy for real-time investment demand and do a little update on gold's price against foreign currencies. Starting off, let's talk about GLD because it's been in the news because of the huge addition to the trust of roughly 30 tons yesterday. And to get back to my general big thesis of my book and on the gold market, what really drives demand in gold is investment demand. And what drives investment demand is negative real rates or declining real rates or real yields. It's not coin sales or jewelry demand or physical demand or even China, or Chinese and Indian demand. I mean, recall in 2013 all that talk about huge physical demand, huge demand from China. I'm not going to say it's meaningless, but really what drives price year in and year out, it's investment demand, and so it's the big, usually Western-based money that buys in via investment demand, and so a huge source of that is the GLD. And so the GLD and the tons in the trust, that is a real time indicator of demand. And if you look at the chart closely, I have there on the bottom part, which is fairly large, that's the tons in the GLD trust. And I think it began, it opened up in 2004, maybe 2005, but from 2005 into 2009, that's when demand was really, really strong. I mean, even during the financial crisis, when gold declined 30% over a 5 to 6 month period, demand for gold remained fairly strong. It didn't budge much. I mean, you can see there were some blips where the gold in the trust went down, but it didn't go down 30%. So again, GLD and looking at the amount of gold in the trust, it's a good proxy for real-time investment demand. And interestingly, to get back to what I was just saying, look at what happened after 2009. Demand was pretty flat. Now, that didn't mean you wanted to sell gold or sell mining stocks then, because they still had a good run into 2011, and even there were some that did well in 2012. But the flat demand from 2010 through 2012, that kind of potentially foreshadowed, I don't know, that might be a strong word, but foreshadowed uh, the decline to come. So I mean, we can see that the real pace of demand really peaked in early 2010. I mean, it makes sense because the economy started to get more traction, and sure, there were some issues in the middle of 2011 that caused gold to run up to 1900, but gold demand was not as strong at that point as it was in the years prior. But I mean, where we are now, demand is very strong, and you can clearly see. Look at the tons in the trust. I mean, that's gone from a little above 600 to almost 1,000. So, um, what is that? I mean, that's up 50% or more in 6 or 7 months. So that's huge demand. There's a clear difference from, I mean, remember a couple months ago, some people were still saying gold was in a bear market. I mean, if you just look at how strong the demand has been recently compared to 2013 and even 2014 and 15 when gold had bear market rallies, I mean, there wasn't that much demand. Now there's tons of demand, to use a pun, as you can see. So again, sorry to repeat myself, but let's focus on GLD and the amount of gold in the trust as a proxy for real-time investment demand. That's the most important thing with respect to demand. And one last thing I'll point out, in the middle there, I'm showing rolling quarterly demand. So every 66 days, what's the demand? And we can see that the 3 times it was the strongest was at the end of 2005, and that's when gold was breaking to multi-decade highs, and also GLD was a relatively new product then. And then after the financial crisis, really when gold bottomed, and we were at the height of the banking problems, and the third time would be recently. All right, let's move on and talk about gold against foreign currencies. In my last video, I talked about how potentially Brexit could mark an acceleration in the trend of gold performing very strongly against foreign currencies. I mentioned perhaps we could see gold and the dollar go up together, and that if that happens, that means gold is very strong against foreign currencies. And this is a chart from my book. I updated it, but the point I made in my book, as you can see from some of the annotations, gold against foreign currencies usually is a leading indicator for gold and US dollars. It tends to make, especially when the major trend is going up, uh, gold against foreign currencies tends to be a leading indicator. And the gold against foreign currencies index, that is basically the inverse of the US dollar basket. So that's how I came up with that. And if you look at the last couple of years, it's very similar to what happened 2000, 2001, where gold in the US dollars was still trending down, but gold against foreign currencies was trending higher. So there was a big similarity to then. There was a major divergence then, and a major divergence recently. As I said, gold in US dollars is making lower lows. Gold in foreign currencies is making higher highs. Gold in foreign currencies bottomed at the very end of 2013, like one of the last couple days in 2013. Now it took a couple years for it to really get going, as we've seen in recent months, but now it's going. And right now, I mean, gold against foreign currencies, I mean, that is roughly about 10% below its all-time high. So the equivalent to that in US dollar terms is over $1,700 an ounce. So gold against foreign currencies is very, very strong, and who knows, maybe that could retest its all-time high by the end of the year. Last point I want to make, just an interesting nugget here for technical people. Gold in US dollars retraced 50% of the huge run from '01 to 11. Gold against foreign currencies retraced 38%. When you're looking at Fibonacci retracements and support targets, you look at the 38%, 50%, 62%. So interesting to say gold retraced 50%, but gold and foreign currencies only retraced the minimum 38%. So gold and foreign currencies looks really strong and looks like it has a shot to test its all-time high in the next 6 to 9 months, I would say. That's all for today. Thank you so much for listening and watching my video. Find more of my work at thedailygold.com, where you can opt in there and get my free newsletter, which comes out every week. And you can also consider my premium service. There's a link for it. There's a couple links on the homepage. Again, that's all. Thank you so much for listening and watching, and I look forward to doing another video update in the next week or two. Thanks.